The markets go up, the markets go down, lots of volatility in the last couple of weeks because of macro-related issues. Now, one issue I don't have is buying more SoFi stock. As you know, I'm quite bullish on SoFi. It's true that year to date we are down. But what's also true is that, well, in the last year, and actually we don't even have to zoom out that much, but I'll show you. In the last year, this stock is up still 37.9%, quite comfortably beating the market. In the last 6 months alone, SoFi stock is up close to 90%. So although we are back at $13, under $14, yes, it's true, we were closer to 18, we're closer to $20 not so long ago. But let's not forget that we're still up 90% in the last 6 months. In the last 3 months, we're down now 15% because, well, let's be honest, after the election, a lot of things went up quite rapidly. Didn't make that much sense. To me, SoFi at $13 doesn't make much sense either. I think it should be going much higher. It's just my prediction here. And so let me talk a little bit about SoFi, a couple of recent announcements as well, and why I keep being bullish despite the constant pressure on some fintech names, right? You know, I'm quite bullish on PayPal right now, but the stock does not reflect the quality of the business. We've seen that with SoFi as well when it was trading at around $7, $8 for a long period of time. But, and this is something that we've talked about during the live stream on Tuesday, a lot of people say, oh, opportunity cost. Maybe. But to me, if let's say 1 year, 2 year, 3 years, a stock is underperforming, but in year 4, suddenly it gains way more than what the market went up in the last 4 years, then I don't see this as opportunity cost. In my eyes, the opportunity cost is just looking back and say, oh, in hindsight, I could have bought this and that. Yeah, okay. If I can go back in time, I'll be buying a lot of other things as well because I know that these things will go up and will outperform. But we cannot do that. In my eyes, if my thesis works out, if management continues to execute well, I think SoFi will outperform the market quite comfortably in the next couple of years. Of course, you don't have to agree with it. You don't have to buy the stock, right? I'm buying because I like the price. And I like a couple of extra things as well, which I'll explain in this video. If you enjoy this type of videos, hit all the buttons, would really appreciate that. Let's try and reach that 90,000 subscriber mark, would really appreciate it. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, I removed myself so you can see the full screen here. First up, we've had this announcement. SoFi closes $700 million securitization of loan platform business volume. So they announced on March 3rd the issuance of around $700 million in notes secured by a pool of personal loans originated by SoFi Bank. Again, the luxury of having a bank here. The transaction was a co-contributor securitization with collateral consisting primarily of loans previously placed with the loan platform business partners. SoFi's loan platform business, which originates loans on behalf of third parties, generated $2.1 billion in personal loans volume in 2024. This represents the first securitization of new collateral in SoFi's consumer loan program since 2021, and the first using collateral originated in the loan platform business. By the way, since the launch of SoFi's consumer loan program in 2015, SoFi has issued more than $12 billion in notes to investors across 25 transactions. The CFO said the following: as SoFi's personal loan product resonates with more and more people, we see continued strong demand for our loans in the capital markets. This offering demonstrates the clear value of our loan platform business and our diversified funding strategy. Now, in short, why is this good? Well, first of all, this transaction basically demonstrates SoFi's ability to attract investors and grow its loan business, so both directly and through partnerships, and of course it shows its financial stability as it can secure funding at competitive rates. Second, this also shows again that there is strong demand for SoFi's personal loans. And this again shows us where SoFi wants to go, right? They want to diversify basically their funding strategy, less risk, higher margins, more fee-based revenue, and well, this is another example of it. Now, continuing here and going back to what was mentioned, I believe in the last conference call, not earnings call, conference call that Anthony Noto had, I believe with Bank of America, talked a little bit more about the loan platform business. So they said the following. In 2018, when he joined the company, personal loans were only approved about 30% of the loans. One of the first things they did was they took the 70% that they were declining and they sent them to someone else and got paid a referral fee. So again, here all about a fee-based model. And then he said something interesting. So we saw success there and we took it to the next step, asked the partners to give us their credit model. We put that in our decision engine. So when someone was applying for a loan, we ran the SoFi credit model, the partner's credit model. If it fails ours and passed the partners, the loan got underwritten with the sponsor bank and they took that loan immediately and we got paid a fee for that. The loan platform business is the next evolution of that, which is, hey, there are loans that you would love to have. He continued by saying they purposely slowed the growth of their balance sheet and they'll continue to keep the balance sheet growth slow because they don't want to be overweighted to capital intensive, lower return products. So the loan platform business is a way for them to allow the company to serve members outside of their credit box and to serve more members in their own credit box if they wanted to go after that volume on their balance sheet, but they don't need to. They're doing that through the loan platform business. It's a great complementary business to them and one that has been evolving of other things that they do, and they think it could be a sizable piece of origination each year. Now switching to the other thing which we already covered in another video here, that's the credit card industry. So they say the following: 80% of SoFi personal loan borrowers are consolidating credit card debt. SoFi doesn't see this opportunity for this product as the personal loan industry, but the multi-trillion-dollar credit card industry. The company will continue to iterate and add new offerings here to create value for customers struggling with expensive credit card debt. More products like temporary interest-only personal loans are probably coming soon. SoFi thinks there are large chunks of outstanding revolving credit card debt that it can very profitably originate while cutting payments in half. And now with the lending platform, it can go pursue all of these potential credit cards without stressing out capital ratios or taking unwanted risks. I've got here a comment from Anthony Noto. Most customers are just paying a minimum card payment like subscription debt. They have no intentions of paying down the rest, but they pay the minimum payment because they may need what's not drawn. So basically it's a never-ending cycle. Never-ending cycle. You will pay the minimum because maybe you'd like to get access to more credit in the future, but you're doing this at super high rates. People don't know that, and they say here they could probably get a loan with us for about 13% instead of, well, the 25-30% that they're probably paying right now. With that said, it's all about, well, brand recognition. And with brand recognition, they launched something like SoFi Plus. Anthony Noto talked a little bit about, well, the comparison again when he covered Amazon back in the early 2000s when Amazon launched their Prime service for $9.99 a month, or I don't remember exactly what amount that is. But also when they launched that, a lot of people were saying, why do we need it? Okay, free shipping, but big deal. Do I need books every week? Do I need this every week? But people were not looking at the big picture because right now, still today, Amazon Prime is probably the best subscription out there. And what's the main point of having Amazon Prime? What's the main point of Amazon, right? Is to serve the customer. Time equals money. And if they can save you time, they're saving you money. With SoFi Plus, they want to do a bit of the same. It is going to be their type of Amazon Prime. With SoFi Plus, we will save you a lot of money, whether it's because we're offering the highest API on SoFi Bank savings, prefer IPO access, new $1,000 home mortgage discount, etc., etc. They want to make sure that more and more people come in, know that, okay, this is the brand, this is what SoFi is offering. Of course, what we've seen in the last couple of quarters is that from a brand recognition standpoint, they still have a long way to go. But with these types of things, they will, in my opinion, continue to grow quite rapidly. And they're doing this in a profitable way. Now, you might have seen something fly by on your X feed, or I think Tanner touched on that as well in a more recent video, and that's a discussion between an analyst, let's say, and an expert, which is basically a former SoFi employee. And here he talks a little bit about, well, crypto, whether they're going to launch a new service, acquire a company to integrate that, if that's allowed, etc., etc. Investments in the SoFi Stadium, partnerships, relationships with the NBA or PGA or whatever. And that's because they want to build up the brand, right? Then he talks a lot about the maniacal focus for cross-selling. Cross-selling is ultimately where you get all those cost savings. Some businesses call it revenue, some businesses call it cost saving. The fact that we are able to acquire a loans customer for sub $50, whereas JP Morgan Chase is trying to acquire that same kind of customers for upward of $3,000, I personally think this tells you everything you really need to know on where the opportunity is there. Now, to be honest, there are a couple of things here that he said that to me didn't really make that much sense unless he got numbers that we don't have access to. So for example, he says here, when I started at SoFi in 2019, this was the year that we were starting to think about unit economics. The cost to acquire a high quality customer with direct deposit was $300 per account. That's down to $7 now at SoFi for the checking and savings products. And I mean, I don't think that is true, because when we look, of course, when you look at the overall, right, the amount of members that they're adding and then the cost to acquire every member, you basically look at the sales and marketing cost, we are still quite close to that $300. So is this the number that they're seeing because of that cross-selling action? Is that what he's seeing? Of course, he left already. So is that the last number that he saw, or I don't know. But I'd be very surprised if SoFi is already down to $7. Now, of course, that doesn't mean that they cannot reach that number eventually, right? We know as they scale up and as they cross-sell, maybe that is possible. But right now, honestly, I don't know where he got that number from. But anyways, going back to the fourth point, which is the most important one, which is the loan platform business, I think everybody's way too focused on that tech platform. Maybe that's because, well, it was hyped up a little bit too much. But if you look at financial services and the loan platform business, which is going underneath the financial services segment of their business, which is growing quite quickly, right? Why are people not excited about that? I just don't get it. Why are you still focused on Galileo? Galileo will grow in 2026. At least that's what they told us, right? But why aren't we as excited about the loan platform business as we were about Galileo? The loan platform business can become much bigger, have higher margins, and could propel this company to higher heights already this year and the next coming years as well. So I don't understand why there isn't as much excitement about that than there is or there was about Galileo. To me, it doesn't make any sense, and that's fine. You know what? Fine. If you want me to buy more shares at cheaper price, I'll do that. I'll sacrifice myself for, well, the greater good. Now, currently, as you can see, the stock was, well, super close to that 200-day moving average already this week, which sits around, well, $12 at the moment. Could we go to $12 or maybe under it? Maybe. Right now, if you look at RSI, we're now neutral, so much better place today than we were before. But to be honest, less focus on ticker symbols and moving candles, more focus on business performance is, I think, the way to go, especially in these volatile days and weeks. Because a company like SoFi, in my opinion, I think $13 a couple of years from now will be looked at and laughed at because it would be a joke. Remember, the 2026 targets are still the same. Even beyond 2026, the growth targets are still the same. So I really don't see why people are panicking. I really don't see why people are suddenly saying, oh, it's not worth it anymore. I think it is worth it. Of course, a lot of people think that in the last 2 years, seeing stocks go up 50, 100, 200, 300% or so in a matter of months is normal, but it isn't, okay? It isn't. So have a little bit of patience, go back to the basics, and you'll see that a lot of positions in your portfolio, I'm not just talking here about SoFi, but a lot of positions in your portfolio are probably already outperforming the market in the last year, might have seen some weakness in the last week, but if the business is doing well, you really have no reason to panic. So all in all, that's about it. Way too long of a video, I know, I apologize, but if you are still here, hit the thumbs up button, subscribe if you're new here, and I'll see you all in the next one. Bye-bye.